Hey everyone, how you doing? If you can hear me, just go ahead and type in something in the question box, just so I know that everyone can hear me right now. Okay, cool. All right, let's go ahead and get started. Hi, my name is June, and this is your weekend webinar for October 1st, 2011. And what we're going to do is spend an hour just going to talk about the market, a few stocks that we're looking at, and then we're going to open up to questions maybe halfway through. And of course, you guys are more than welcome to participate and comment or ask questions at any time by simply typing in the question in that question box right in front of you. And then we'll get to it in the order in which it was received. All right, let's take a look at this market here. I'm looking at the S&P 500 on a 5-year weekly view. And one thing you want to notice is that the market has been basically in the box range. I mean, if you listen to our webinar, if you're a member of our website, we've been basically talking about how the market has just been very choppy and just been in this box range for over a month. And you kind of have to expect that, because anytime when you have a huge drop that happens, I mean, you need some time for it to kind of work out the extremeness, right? Kind of like anytime you have the huge drop, you need some time to work out the extremeness. Okay, so you can't expect anything to go straight up or straight down. It needs to work out the extreme levels. Now, if you just look at this pattern here, I mean, this looks like basically a flag, right? If you guys are familiar with flags, it's a consolidation pattern, meaning that there's more, it's resting for more downside in this case, right? If this is an uptrend, then it's resting for more upside. But since right now we are in the series of lower lows and lower highs, then it's currently resting for more downside. And that's basically what it means, that it's resting right now. And looking back to past price history, this is where kind of looking at the past and making comparisons kind of helps, so it gives you an expectation. Now, we all know that this is a head and shoulders pattern. We talked about it before. And we'll go into more details about the head and shoulders. But, something interesting here was the head and shoulders was also formed back in 2007. And after it made that break in the neckline, you can see it kind of formed a small base also, almost a triangle back here, and kind of similar to here where instead of a triangle it's forming a box. And then once it broke down from that little triangle, made a new low. Okay, not exactly very low, but it still made a new low past this prior one. So that's kind of what I'm expecting right now with this market. Is it's resting and it's probably going to make a new low. Okay, it looks like it is, right? It's starting to roll over, and probably back here. This is some major support here back in the 1050 area, give or take. So I will look for that target area as a possible target for this market if we were to head lower from here on. And then what happened afterwards is, after this market made a new low back in 2007, it made a bigger rebound, basically back to retest this neckline. So that could be a possibility if we make a new low, and then maybe we get some decent rebound, probably back here. Okay, so that's, or at least to the moving averages, because you can see it kind of stalled around this 50-week moving average back here. And even looking at the moving averages, it's already starting to roll over or turn under. You can see the 20 is now under the 50, just like how we had here. Once the 20 goes under the 50, then you can see the longer term trend has changed, right? Just like when the 20 it gets above the 50, then you can see the uptrend continue for quite some time, and now we're seeing that turnover right here. So these moving averages, even though they're lagging indicators, it kind of tells you the overall longer term trend for the market, and it has done so at every turning point right there and right there. So once it turned, the trend kind of continued for a good year or so, and once it turned, the uptrend here continued for a good year or so. So once it turns, maybe we can see some more downside for these coming years or so. All right, so that's something to keep in mind. All right, it's not necessarily a predictor or anything, but it's just something to tell you a possible longer-term trend for this market. Okay, let's go into a daily view. So again, nothing new here that we haven't mentioned already. The box range still holds true, and this 1120 level has been holding on for quite some time. It attracted buyers here, attracted buyers here, and attracted buyers here. But notice how every time it made a bounce from this level, it's starting to get weaker, right? It's always maintained itself under this 50-day moving average, just like here, all right, and even here. So notice how every bounce it gets weaker and weaker. So it's telling you that the buying pressure currently, even though we're still in the box range, the buying pressure isn't as strong, right? Because every time it bounced, it's not able to get any higher. So you have, even in this box range, a series of lower highs. And on Friday, we had some last-minute selling on Friday, and basically we're close to this level once again. Okay, so who knows, right? Maybe we'll get another bounce, maybe a weaker bounce up, and then eventually it'll break. But since we are starting a new month, last week was the end of the quarter, and we are starting a new month. And typically October has been pretty bad for the markets if you look back in the past history. So we could probably see some more weakness coming into this coming month of October. Okay, so I'm suspecting if we do make that new low, then maybe we can get that end of the year rally into November and December. So we'll see what happens after it makes a new low. And I suspect that when we do make a new low, it won't be as intense as this one here, all right? Because a lot of the intensity has already been gone, and this one will probably just trickle down into a new low. So that's something that I'm expecting as well. And something I mentioned already is that I don't expect this, if we do make a new low, I don't expect it to be that intense. And that usually signals a possible last leg to this entire move before making that bigger rebound. All right, and then let's take a look even further deeper. And one of the things that we talked about on our website, something that we tell our members is to watch out for the hourly stochastic. Okay? If you guys use stochastic, this is one time to be using it because they work well right now in this box range. Because if you look at every time the stochastic hits oversold, it marks an important turning point, right? Or marks an important bottom for this market where it rebounded. Okay? And then every time it hits overbought, it marks an important top, right? Some kind of a top here. Okay? So that's something I'll continue to use. And then you notice that the stochastic is starting to hit into that oversold territory. So I suspect if it sells anymore, we can probably get some kind of a bounce from that point once it gets into oversold territory once again. Okay, so pay attention to that. These are like something that I use as a short-term telling indicators to let me know that the market is hitting that short-term bottom and we can expect a bounce. Or once the bounce is done and it looks overbought, then okay, maybe that's a good point to start shorting again. Okay, but overall in terms of trading, the shorting has been working really well. I don't know if you guys short or are familiar with shorting. Just think of it as buying, but basically shorting. Okay, if you're not familiar with looking at shorts, just turn your laptop or computer upside down, and it's basically the same setup. For example, if you look at let me give you guys one here. For example, DHI, right? If you were to turn this upside down, this almost looks like it's ready to break out. Okay, if this is a bullish stock, it looks ready to break out. But since now we are facing in a downtrend, this almost looks like it's ready to break down from this $9 support level. All right, so basically shorting, the concept and the setup is the same. Right? We still look for the same patterns like the triangles, volatility squeezes, things like that, and then we just trade it accordingly, except it's to the downside. Here's another example of a volatility squeeze that we trade. And MGM, I sent this out to our members that, it's in a volatility squeeze, a break outside of the bands would be a good trade, and which it did, right? Normally in a bull market, we would wait for what? A break to the upside once it's squeezed out. But now we are trading it to the downside, okay? So again, right, it's the same thing. Trading-wise, it's the same thing, but it's just you're selling to open, right? Sell to open as opposed to buy to open, okay? And sometimes, depending on the stock, the only difference between buying and selling is you don't always get to short the stocks you want, right? Because there's this one stock here that I wanted to short after it broke down, but you can't because, well, sometimes your broker do not have the available positions. So that's the only thing about shorting is you don't always get to short the stocks, and especially like stocks that might be a little thinner. But the alternative, this is why we trade options as well, is you can buy puts on these options or on these positions. So if you can't short it, your alternative is you can buy puts. Now, I do have a criteria for buying puts. It's not always about just buying puts and seeing. I always want to make sure that it also fits the criteria whenever I choose options. And one of the criteria is, of course, you want to see there's high open interest. Okay, you don't want to ever get into a position that has low open interest because it's not easy to get in and out. And the other criteria that I always look for is a narrow slippage, meaning a narrow difference between the bid and the ask. For me, about 30 cents is good enough. All right, anything wider than 30 cents or 25 cents, it's a bit wide. And this one fits also, right? It's only about 10 cents, 15 cents at most, 20 cents at. So it's okay, you know, for me. The reason why, the reason why I prefer a narrow slippage is because once you buy it, let's say you buy this one at 250, you're already down 15 cents. Okay, so the stock has to move an additional amount to make up for that 15 cents before you even see profit. Okay, so that's why I want there to be a narrow slippage for that reason. And so narrow slippage, high open interest, and that's basically my criteria for choosing how to buy or the if I want to buy puts. Now, let's say the open interest is low and the slippage is wide, then no matter how good the setup is, I'll still skip it, right? Because I don't want to have that uncertainty or the wide slippage go against me, right? So even if it's a good setup, I'll skip it because I know there will be other opportunities out there. Okay, so never think that just because you missed one setup that there's no other setups out there, but there's plenty of setups out there. Okay. Any questions about the market so far? Let me ask you guys, do you guys have any specific questions regarding the market besides where is it going to go? Because I can't answer that for you guys. Okay. If not, then we'll just go ahead and continue here. All right. Now, as far as the trades that we've been doing, a lot of times we haven't really been doing a lot of trades. Okay, someone asked, what do you see as a new bottom? Be more specific. What do you mean by a new bottom? If you, I'm assuming, I think the bottom-wise, if that's what you're talking, is a target level that I'm aiming for, and kind of what I mentioned already in the weekly view. I think around here could be a good target to aim for. I don't know if that's like a new bottom, so to speak, but yeah, right now we're holding steady at this 1120, and if that 1120 breaks, then I'll look for possible 1050 as the next level. You can see back here, back in last year with the whole flash crash thing, around the 1050 area seems to be holding as support, kind of like how 1120 is. So that's probably where I'll be looking for that new bottom, if that's what you're assuming or talking about. So 1050 is exactly what I'm looking for right there. Let me go into a few questions since someone asked. Okay. With earnings season coming up, how do you see? Well, that's the thing. We don't know how earnings is going to affect the market because I don't anticipate the earnings and how it affects market. I just see where it goes, and the main thing is whether it's earnings or not. I'm just looking for this break here, and if it breaks, then I'm aiming for this area. Now it could be that the earnings could, if people are expecting bad earnings, and that's the thing, right? If a lot of people expect a certain thing, it usually doesn't work out, and that's what I've realized over the years is whether it's a chart pattern, whether it's a sign like that whatever omen sign, right? The more they put it on TV or the more they put it on media, it's not going to work out because everyone knows about it. And so if you notice that everyone's expecting bad earnings, then maybe the market will react in opposite to that. Okay, so but overall, I don't really anticipate earnings, so to speak. But it is coming into earnings season, and if you are holding a position, So here's the thing about down markets. Down markets tend to exaggerate things. Okay, so if a stock has bad earnings, it might sell off a little more than it should if, let's say, it was an up market. Okay, so just be cautious about that. All right, so it tends to exaggerate things a bit. So if you're holding a stock and it's coming into earnings season, and you know that stock tends to make big moves because of earnings, then I would be a little cautious holding that stock, or at least if you are going to hold it, consider buying some puts as protection. Okay, strategy. We'll go into strategy later, and then what do I see next in October? Kind of what I mentioned already in October. See, that's the hard part. I don't know what's going to happen in October, but I'm just letting price tell me what to do. Okay, because I don't know what's going to happen in October, November, or December. I wish I did, right? But like I said, the main thing here is a price break. It doesn't matter if it's October or November. The main thing is if it breaks this level, then more than likely we'll head down here somewhere. Okay, so whether it happens this month, the next month, or December, yeah, I don't know, right? But the main thing is just watch price action. Okay, that's the main thing. Watch the price action. Okay, that's a good point you brought out is the selling part. 2 days ago, I think on Thursday, if you look at the individual stocks, see, this is why it's important to look at individual stocks as opposed to the stock market, because the stock market is just one indicator, one thing, a collection. All right, it's a collection of stocks. But if you look at individual stocks, it's a little more telling. Okay, someone mentioned Apple. Now on Thursday, let me go back to the market here. On Thursday, we actually managed to pull in some gains on the market overall. But if you look at the bigger name stocks like Amazon, on Thursday it sold off. Sold off on Thursday on Apple. GMCR, right, sold off. Priceline sold off. Okay, so I can go on and on, right? Baidu, Win. So these bigger names, I mean, these stocks are over 100 points, and these stocks are especially Apple, Amazon, Priceline. These stocks are stocks that institutions hold. Okay, because I don't really think a whole lot of retail traders hold a $500 stock. Okay, so that's something you have to think about: is why is it that these stocks, these bigger names, are selling off, but yet the market's still green? And maybe it's the end of the quarter. Okay, maybe they're just selling off to at least try to book in some profit, right? Because Apple actually had a nice run despite what happened in August. So they could be just locking in that profit. And this is something I mentioned on Thursday is maybe they know something that we don't, right? Because they are institutional players. So if they know something that we don't and they're selling early before the end of the quarter, that could mean that there's more weakness coming in, right? So that's something you have to look for. These are clues, right? These are clues that these big players are leaving you, and it's showing up in your charts by telling you that, hey, they're starting to sell off Apple, they're starting to sell off Amazon, Win, Priceline, even like these bigger names like Chipotle, okay? They're starting to liquidate their positions. So that tells you maybe if you're in the same boat or if you're in the same stock, maybe that's something you should consider as well, right? Because if these bigger guys are selling their stock, then you have to ask yourself, why are you still holding on to it? Okay, and so that's something that I would look for, and especially given that, okay, the market looks ready to break down, that we could be seeing some more weakness coming on in these coming weeks. So that's very telling. Okay, looking at individual stocks as well. And another thing is, if as I'm going through my watch list here, I notice a lot of them are setting up for some pretty decent trades to the downside. It's almost as if this was a bull market, and in a bull market, what do you see a lot? You see a lot of stocks that are setting up to break out or setting up to at least go higher. Now, as I go through the list, this is actually a trade that we recommended over the weekend. For example, like BAC, Bank of America. All right, we recommend to short Bank of America under $6 because, well, it actually looks like it's ready to break down, right? You have this little descending triangle here. And again, if you're not used to looking at a stock to the downside, well, just turn it upside down. What do you see here? You see a possible cup and handle right here, right? Little cup, and there's your handle, right? Well, in this case, it's an inverted cup and handle. So if this was a bullish stock and you see a cup and handle, what do? You buy it when it breaks out. But in this case, since this is kind of an inverted cup and handle, well, you sell it or you short it when it breaks down. Now, I know $6 isn't a whole lot to be shorting, but you know that Bank of America can easily go down to $3 when it did back in 2009. All right, so there's still some room for it to short, even though it's basically down to the $6 level. Now, a few others that I'm watching. Okay, EMR, same type of deal, right? It looks like it's ready to break down, right? You have this nice base here, nice little triangle. And so, again, if this is a bullish stock, you would pay attention and say, wow, this looks ready to break out. I'm getting ready to buy it if it breaks out. So in this case, if it breaks down from 41, then that's something that I would short. And there's a few others that I want to give you guys. FR, okay, same type of setup. A lot of these stocks have that same setup where it's right there. It's basically right at the edge of support right now. And anything that comes out from the market will basically push this thing over the edge. So something like that. KKD, something that we actually, someone posted on the forum, Luis posted on the forum. And you can see here it broke down from 7. And then now it's starting to sell off. And probably aim for, what is it, 650? Okay, the gap area. Notice how gaps always make, and I always said this many times, gaps always make for great support and resistance. So once it breaks the top of this gap, then you know there's a good chance it could come down to the bottom of this gap at 650. And if it breaks this gap, then you can tell it's probably going to head lower from that point on. Okay, so look for that as well. Here's another one, AAP. Okay, same type of deal. Not as strong or not as weak as the other ones. Okay, I personally like to short weaker stocks, right? Basically stocks that are still underneath the moving averages. This one's a little bit stronger, okay, because it's not exactly underneath the moving averages yet, or it is, but it's just barely. All right. So, but what I like about this pattern is that it's actually forming some kind of a head and shoulders pattern right there. Okay, and we are right at that neckline. So this could be a good short, and a possible target is what I usually do is take the height of this head and shoulders here. So we'll say about 58 to 63. That's about a 5-point height, right? 5-point height. And then if you take 5 points down to the breakdown level, so 58 minus 5 points, that gives you a target of about 53, which coincidentally falls right at this gap here. So if you were to short this thing, then I'll probably aim for this area, this general area, as a possible target to the downside. Okay, let me give you guys some more here. Oh, one thing to look for, one thing to, this one here, EZPW, same thing. After it broke down, it's forming a small flag, okay, a small little flag. So wait for that breakdown under 28. Another one here is MCP. Okay, MCP sold off already. We were bullish on this stock, but see, this is where you have to be a little back here when MCP looked like it was forming an inverse head and shoulder. It did rally higher, but then it fell back into it. So we changed our mind as far as if it's bullish or not. And that's what you have to do. Even though you have, okay, a certain pattern that appears before, but once you get some new data that tells you, okay, this stock is no longer bullish looking, then you have to change your stance. And you have to be ready to change your stance, because you never want to be stuck in one position or never want to be stuck in one opinion where you think the market or the stock is going to go. Okay, so you always have to be able to just switch stance. And in this case, MCP actually broke down from this triangle. And right now it's trying to form some kind of a base right here. Just like the market, it's forming some kind of a base. And if it breaks down from this base, it can probably head lower. And this is a fast-moving stock, okay? So it's a high beta stock. So be careful about that. Now, one interesting thing that I want to point out is the head and shoulders pattern. Okay, I think this pattern has basically called top for the market, but it's also showing up quite a bit. You know, one of the pattern I showed you here was this AAP, a head and shoulders pattern. Another one that we actually traded for our members is Baidu, where it formed a big head and shoulders pattern here. And it's not always going to be textbook looking, okay? So it's not going to be always that clean looking. So this is where you kind of have to train your eyes and think, okay, could this be a head and shoulders pattern? And this one's yes, right? a trick that I do is go out into a weekly view. Okay, go out into a weekly view. It kind of condenses everything a little bit, and it makes things a little easier to see. And you can obviously see here, yeah, this is a head and shoulders pattern right there. And for those of you who don't know what's a head and shoulders, it basically means that, well, let's first define what's an uptrend. An uptrend is a series of higher highs and higher lows. Okay, it's as simple as that, higher highs and higher lows. And then once you start seeing that this no longer makes the higher high. See, this is the fail point right here where it stops to make that higher high. Higher high means that it pushes beyond this previous high, but instead it forms a lower high. And once it breaks into this previous low, then that basically means it's a change in trend. Or some people like to give names, and they would call this a head and shoulders pattern, where you have the left shoulder, the head, and then the right shoulder. The main thing is the right shoulder. That's the real thing to really pay attention to, is this right shoulder right here. Because if this thing fails to break above this a new high, then there's a chance that once it breaks below this neckline, that we could be seeing a change in trend. All it really is changing from a higher high to lower highs. That's really what it is. Okay. And as far as Baidu, this is where looking at moving averages come in handy. You can see what happened with Baidu. Looking at patterns, what do you see? That this stock, ever since 2009, when it switched to an uptrend, has always maintained itself above its 50-week moving average. Even when it was trending strongly, it maintained itself above this 20-week actually. And you can kind of see once it started breaking down, you can kind of tell the momentum has shifted. And as soon as it broke this week underneath this 50-week moving average, then you know that this uptrend is pretty much done, all right, for Baidu. And there's a good chance we might head lower or just chop around. But you know that this uptrend that it experienced for a good 2 years is done. Okay, so you know the saying, right? A trend is your friend until it ends. Well, basically, it's no longer your friend anymore right here. Okay, so it's ended. And you have to expect that nothing goes on forever. So sooner or later, a stock trend will end. And this is where looking at weekly moving averages, just like Netflix, right? Netflix basically fell off the face of the earth right here. But I did mention to you guys before that, pay attention to the 20-week, right? It's always maintained itself above the 20-week, and here, once it broke the 20-week, the characteristics, the momentum of this stock has changed, right? Especially if once it broke this 50-week, then you know that Netflix is no longer in an uptrend, or at least the current momentum to this uptrend is gone, and we can probably see some correction or pullback for Netflix here. So that's something that you have to pay attention to if you're looking at stocks that you're looking at. Look at how it behaves in the moving averages on a weekly point of view. Okay, someone mentioned Baidu, Netflix, Priceline. Very good example. Okay, the last time Priceline came back and kind of retested this 50-week, well, guess where it's at right now? It's at the same point where it's retesting this 50-week. And if it can't bounce back up from that 50-week like it did here, then it most likely will break down from that point. Actually, if you look at Priceline, it's a rare pattern, but what do you guys see here? 1, 2, 3. Yeah, it's a triple top, right? You don't really see it that often. Okay, at least I don't really see it that often. Most of the time you see a double top, but this is a triple top, so that tells you it's forming some major top pattern right there. Okay, so this is telling you if you're holding on to Priceline, be careful right here, especially if it breaks the support level. Then more than likely it could head lower from that point on. RIM, we already know what happened to RIM. RIM is pretty much done, so I don't even really need to pay attention to RIM other than it's going to head lower from that point on. And then someone mentioned Moss. So same thing, a lot of these stocks, even if you look at the weekly view, it's not really telling you a whole lot, but overall, you see breaking of support left and right, and then Yum. Okay, same kind of deal where you are seeing a break of these moving averages, weekly moving averages, right? It's holding above the 50, and now it's starting to, looks like it's ready to break down from this weekly. And what else do you see here? Some kind of a head and shoulders pattern, right there. Okay, not always the cleanest looking, but you have to pay attention to these patterns where, okay, now I'm starting to see this lower high, right there. So a lot of these, that's why I mentioned head and shoulder pattern seems to be a very common pattern for tops. But you have to also see where in the context of these head and shoulders show up, right? Because they make more sense if you see a head and shoulder pattern after an extended run. Okay, at least it makes more sense. It seems it's more of a topping process when you see that. When you see like a head and shoulder like somewhere here, it doesn't really make a whole lot of sense because, well, it's not really, the stock hasn't moved and there's really no top. But once you start seeing a stock that's been running for a year or two, and then all of a sudden you see a head and shoulders, then that makes for a better, more valid head and shoulders pattern. Okay, here's another one for you guys, Lulu. All right, great example here. Made a nice run ever since 2009, and now we're starting to see that head and shoulders pattern right there. Okay, a failed higher high. Now going into a daily view, it hasn't exactly broken down yet, right? This is a leader. So this is the normally I don't short strong stocks like these, but once I see the topping pattern, then I'll start paying attention because a lot of these leaders, like you saw with Netflix, once they break down hard, right? Like Baidu here, once they break down hard because a lot of people have bought this stock along the way. Okay, so there's a lot of room for it to fall down, right? So that's why with these big stocks, these leader stocks that have led for the past year or so, once it breaks, it's going to break hard. But I'm not going to call top and short here or short here. What I'm going to do is wait for support and short here. Because once it breaks, see, this is the thing, right? Once it breaks, it's going to start falling. Okay, don't think that you have to short all the way up here and up here to get that price move. No, you don't. Okay, once you break that support, it's a stronger confirmation. And then once it breaks, then you know that other people will jump on. Because I'm not the only one who sees the head and shoulders here. I'm sure other people are looking at this and they probably see a head and shoulders. And when they see that, once it breaks, everyone reacts to the same thing. Right? That's how technical analysis works, is everyone reacting to the same thing. Right? If everyone learns about the head and shoulders, what do? They look for that neckline. And once they see that break of the neckline, either they're going to sell their long positions or they're going to initiate some short positions. So you're going to see this huge selling volume coming in. Okay, so that's something that you have to realize is, well, you're not the only person that's looking at this stock. Okay, so that's why patterns work for that reason. Someone asked about Citigroup and Berkshire Hathaway. Okay, well, let's look at Citigroup. Now, if you've been on the forum, you know how I feel about financial stocks. I'm bearish on financial stocks. Well, not because of any political or financial reason, but just looking at the chart. I mean, look at this chart. It's in a downtrend. Okay, it doesn't get more simpler than that. It's in a downtrend, and it's been in a downtrend for quite some time. And it made, financials, you have to compare it to the market. Given that the market rallied higher, this thing barely even rallied with the last 2 years. So there's definitely some weakness going on with the financial stocks. But yeah, as far as shorting, it's still a good short because, well, it's still underneath this moving average right here. You see how it's never able to get itself above the moving average? And this is where you compare the market. If the market looks like the market has managed to at least come back to the 50, right? But then if you look at Citigroup, it's never even touched the 50. It failed at the 20. So this is a much weaker stock, and it makes for a better candidate to short because of its inherent weakness, for its inability to bounce higher. Okay, so there's some selling pressure that's always holding this stock down. Now, pattern-wise, it's not as clean because of this little blip right here. Okay, that's why I prefer something like BAC, where, okay, it's still a very clean-looking pattern where it hasn't broken support yet, but it's still shortable. I'm not saying it's not. And there's still quite a few banks that look like they're shortable, like CMA, financial-related stocks here. All right, a break under 22. Some other ones like Zion, which already broke down already. So a lot of financial stocks are breaking down. And let's look at Wells Fargo. See, Wells Fargo looks a little stronger, right? It's at least back to the 50, but it's still in the box range. And then let's look at some other ones like JP Morgan. Yeah, much weaker, right? Much weaker. It's already trending lower. See, Goldman Sachs already trending lower. I mean, it's not in the box range like the market. It's already moving down, okay? It's actually channeling down. So you can see that you can probably expect if Goldman Sachs or the market moves lower, probably back to this bottom of the channel, and it'll stay within this channel until the market decides to move up. So Goldman Sachs, easy to spot right there. Okay, it's already weak. It's already hitting lower even before the market starts to head lower. And then Berkshire Hathaway. Not much to say here, although it is interesting to see it get above its 50-day moving average right there. Okay, so if it can sustain itself, maybe form a base and move higher, then that's a good sign. But if it falls back under, then maybe not so. Okay, maybe not so much. But it looks like it's holding itself relatively well compared to the market. So yeah, not as bad. Okay, Citigroup, between the two, Citigroup and Berkshire, Citigroup definitely the weaker one. Okay, SLV and GLD, let's go into that. Okay, you know, I've already mentioned that SLV before, that this is a major top, and I don't see SLV coming back here anytime soon. And I mean, you can tell already that it broke down. All right, so this is a classic breakdown pattern where it broke down initially, gets that, you know, dead cat bounce, and then just fails again miserably. So SLV, I don't know, it's not looking too well right now. And if you're trying to get in on the bottom, I don't see a reason to why you want to buy SLV, because, well, it's already broken its trend, right? This one looks like a big head and shoulders too, right there. Again, right, you have to kind of train your eyes, right? It's not going to be clean, or it's not going to be your classic looking head and shoulders, but from a weekly view, you can see it already broke down from that pattern. So it can probably go lower, or it can just probably just stay around this area. But again, I don't see it coming back up here anytime soon. Okay, so if you're holding to this thing, you're probably just going to be holding it for quite some time. Now, what you can do if you are holding to SLV, because they do have options, if you still want to hold SLV, okay, I'm not telling you to sell it or anything, but if you still want to hold on to it, at least try to make the best out of it. Okay, all right. If you're holding on to a stock, at least try to make the best out of it by selling some calls. Okay. So if you're holding on to a stock and you don't want to get rid of it, well, one thing you can do is sell some calls. For example, SLV has a lot of good options where you can sell. Let's take a look at where it's at right now. It's at 28, 29. Okay, so let's look at some price levels that you can sell. Depending on how aggressive you are, okay, let's say you want to sell 31 strike for about 40 cents. So basically you're selling it around here. I would like to sell at least above here, like maybe 32, 33. Let's see here. 32, yeah, it's about 21 cents. Okay, so depending on how aggressive you are, if you want to sell real close, you can get more premium, but you also get the chance, you might get the chance of getting called away. All right, so if you want to hold on to this stock and you don't want to get called away, then don't sell too close. Or if it gets above it, then you might have to exit your calls. But if you sell something further like 32, where it'll probably just hover around here, and 32 is at that next resistance. So once by, well, this is actually a weekly option, which is good, right? That's why I prefer selling stocks that have weekly. But if you want to sell an October one, you can sell pretty far away for a decent premium. The same 20 cents, you can sell all the way out to 36, which is all the way up here. So you're basically guaranteed, I don't want to say guaranteed, but you're pretty much pocketing that 20 cents. And let's say you have 1,000 shares, you sell 10 of them, that's $200 that you can pocket in every month or so, which at least helps bring down the cost, right? I mean, if you bought up here, I mean, you're in deep trouble right here. But at least, okay, if you're planning to hold on to it, why not sell some calls? At least try to break even or reduce your costs. Collect 20 cents every month. And it does make a difference, okay? So that's something that I would recommend to you guys if it's a stock that you're holding and you don't want to sell. At least look at the calls to see if it's something you can sell and collect a monthly premium instead of just letting it sit there and hope that it'll jump back up. All right, be a little proactive about those positions. And then gold also. Okay, all right. Remember how I told you guys that gold starting to look like what SLV did back here, right? Starts to get vertical, right? Once it starts to get vertical, once it starts to separate from its moving averages, it's like that. And then once you start seeing high volume near the top, you know that it's hitting some kind of a major top. And gold did exactly what SLV did, right? It shot up, got very separated, and you saw some high volume near the top. I mean, that's usually a topping process, especially the second time around when it rebounded higher. Notice how volume died down, right? So the buying pressure is not as strong up here, and it actually formed a double top here. Now you got one top, you got two top, and then it broke that neckline, or broke the support level, and it just fell from that point on. So gold is looking like it's hitting some major top, and it could probably use some rest. Now I'm not saying I'm bearish on gold. Right, the trend is still high, right? The trend is still up, but I think it's due for some kind of a rest. Now the main thing you want to pay attention to is, again, right, the weekly. If you look at the weekly view, every time it came back to the 20-week, it attracted buyers. Okay, see, attracted buyers there, and it looks like it's trying to attract some buying right here, but it looks like it's already broken from that 20-week. So the next level of support here is what? This 50-week. Okay, so it never breached the 50-week. Okay, all right. So gold is not immune to selling off. Okay, so don't think that gold is immune to being sold off. It's not. Nothing is ever immune to selling off. Okay, so you have to be a little more subjective about things and look at things from a logical standpoint. Where, okay, if it never broke the 50, if it breaks this 50-week, then I should be a little more cautious on gold. All right, especially since you see how every time it hits that overbought, it pulls back. Okay, so pay attention to gold and look at how vertical it got. That's usually a sign of some kind of a major top right there. Okay. USO, I mean, USO, I don't know. It's not looking too good. So if you're holding on to oil, it's not that great right now because it's in a downtrend. Or at least if it's not in a downtrend, it's just plain sloppy. Okay, it's just plain sloppy if you look at this thing. Right. Not interested at all. All right. If it's a stock that I wanted to buy, no, I wouldn't buy this. Okay. ABT looks okay. Not really a whole lot that I can do because, well, it's near resistance, but at the same time, if you look at this thing, this is why I always look at a longer term just to see where it's been and where it's gone. It's stuck right now. Okay. Even if it's not, you can tell that it's at the top of the range. So when you buy right now, even if you decide to buy right here, you're not going to gain a whole lot, right? Because you know that every time it hits this 53.5, it falls down, okay? So your edge, there's really no edge in buying right now, because if you buy right now, you might gain that much, but there's a chance that you also might be able to lose that much, okay? So the risk and reward for this particular stock isn't there for me. So not interested at all. Okay, Amazon. Let's look at Amazon here. Before that, let me get to another question that was asked earlier. What's a good option stock strategy at this point if I think the market will rebound but want to protect myself from the downside? Okay, to protect yourself, to be honest, the best thing to do is to buy some puts. You know, the other thing is to sell them, get back in when the rebound or when the market's done selling. But if you don't want to sell it and you want to protect it, the thing you can do is buy protective puts and at the same time sell covered calls, so that way you're protected on both ends. Or basically you're trying to maximize your position. For example, let's take a look at Baidu since it broke down. Depending on your stock, I don't know what stock you're holding, but if that stock does not have options, then, you know, sorry about that. But if it does have options, then what you can do is, in addition to buying puts to protect yourself, you can also sell calls because when you sell calls, you're also collecting premium. So that helps you collect some premium, bring down your cost. So, for example, if you look at Baidu, I mean, something like this, yeah, you're able to sell some pretty high premium all the way at 130, which is basically at this 20-day moving average. I mean, you're able to collect $2, over $2 for this particular option. So that's pretty good. But at the same time, if you look at the puts, they're a little more expensive. So one trick that we like to do is, if we have stock, you can sell covered calls to collect premium, and then you use that premium to buy puts. Okay, so basically it's almost like it's a free trade. For example, so if you, let me go back to the calls. So if you sold the calls for $2.23, that's in your pocket already. Okay, so let's say you sold 10 of them, that's $2,000 in your pocket. And depending on how far out you want, let's say you want to buy some puts, even for the same month, for 293, that's almost a free put right there, right? You just put up an extra 50 cents or so. But that by selling those calls, you already collected $2.20, and if you want to buy protection, you just put up another 50 cents more for some protection to the downside. Okay, so that's one trick you can do. Sell calls once you collect that premium, then buy some puts for some quick protection. Okay. Okay, let me go into Amazon. So the same thing I kind of mentioned about Amazon, Apple, all of these big stocks that they've kind of sold off already. It seems like a lot of institutions are selling. But what you know about Amazon is that it created a fake breakout right here. Okay, see how there's a previous high and it shot up above the previous high, but it quickly fell back down. So that's not looking too bullish for me. Let's look at the weekly view. Now, weekly view trend-wise, it's still holding up. Okay, it's still above its 50-week moving average, and it's still making higher highs, higher lows. Okay, so Amazon, it's still a strong stock. I'm not saying to short it. Okay, I'm not saying to sell it, but right now I'll be a little cautious if you want to buy into it. Okay, because of, well, given the current market conditions, and also given that it seems like it kind of made a fake breakout or a false breakout right here. Okay, so I would not initiate any longs just yet, not until the market looks like it's ready to rebound. But at the same time, since it's an uptrending stock, I don't want to short it either because, well, I don't short uptrending stocks, right? Because I'm not smart enough to call a top, right? And that's the thing you have to realize is like, hey, you're not going to be able to call tops every time. But once it starts to show some kind of a pattern, like a head and shoulders pattern, then okay, then I'll be interested and maybe start shorting at that point. But right now, I don't really see a clean pattern as far as for me to get short on the stock or even a clean pattern for me to buy into the stock. All right, so SLV GDX long call or put for weekly. Well, I guess you have to ask yourself, do you want to go long call or put? But they do have some pretty good trades. If you look at GDX and SLV, they do make some pretty good movements, and some people like to buy the weeklies, which Chris also mentioned is since weekly options are so cheap, it kind of makes sense to buy them, and since they move a lot, especially these stocks like SLV, GDX, think of it as like a little lottery ticket. For example, you buy a weekly put, for example, here for 38 cents, and when the stock moves, right, when the stock has high volatility like this, it can easily move a couple of bucks. So that 38 cents, let's say it moves $2, can easily become $1. So you more or less like double your money right there for a minimum amount right there, right? For 38 cents, 10 contracts, that's 380. And what Chris usually likes to do is he'll buy something like this, and he'll sell it when it loses half its premium. So from 38 cents, once it becomes 19 cents or so, then he'll get rid of it, right? So kind of to control loss in that sense. But once it like doubles or triples in value, then of course he'll book that profit. So these kind of make for some pretty easy trades where, okay, if you have some extra cash lying around, whatever, you buy some of these, and then eventually one will become, a big hit, especially like right now when the market's moving and these things are moving so much that once you buy it, that 38 cents can easily become 50, 60, 70 cents for that time. So I guess we'll open up to some more questions. We have about 10 minutes left, so if there's anything that you guys want to talk about or mention, okay, or stocks that you want to look at, then feel free to keep posting. But going back to the head and shoulders pattern, it's worked really well. Okay, here's another example of it, like when, all right, big head and shoulders. Here's the neckline, and it broke from that. Now, here's the thing, here it broke on high volume too, so that looks pretty bearish to me. Now, can you still play this? What's a good way to play this? Like, let's say, it broke from the head and shoulders, I missed it. What can I do? Well, you could actually sell some bear call spreads because, well, for one thing, premium is pretty high right now, so you can expect that premium's high because of the high VIX. But also, whenever you see huge volume breakdowns or moves like this, the stock itself will have high premium. So let's take a look at the spread side. Now you can be safe and sell all the way like at 145 because there's a good chance that this stock won't go all the way back up here, especially breaking down like this on high volume. Now you can wait for a rebound, or if you're impatient, you can enter early. Let's look at more here. So if you look at this thing here, let's say the 145, not a whole lot, about 28 cents. Let's do the 140, 145. So basically you're selling here, right? So assuming that wind doesn't go all the way back up here, basically to play this, right, this is something that it's just like how we treat, how we sell bull put spreads on stocks that break out. Well, this is a stock that broke down, so you can sell bear call spreads, and you sell it at above the resistance level, above the breakdown level, almost at a safe distance. So you can just basically sell the spread and allow wind to do whatever it's going to do underneath support level, and just kind of sit back and collect your 45 cents for the next 20 days. And so it's an easy trade. You know, these are spreads that you can do where, okay, you didn't exactly get in on the short side, but you can still participate in these type of breakdowns, right? Like even Baidu, I'm sure you can sell some spreads up here for still a good amount of premium, even though you might have been missed down on this breakdown. So there's still stuff you can do, especially with options. You know, you can get a little creative in that sense and sell calls or sell premium, sell bear call spreads, because right now these stocks have high premium because of the inherent breakdown and the increase in volatility from these guys. Okay, so let me give you guys some more on the head and shoulders here. Okay, right here, and right here. Okay, and where's the neckline right there. Okay, so a lot of stocks, like I mentioned, a lot of stocks are setting up for some breakdown. So which kind of tells me that the market could be ready to break down. By looking at individual stocks, by looking at these stocks, they're telling me that the collective action of these individual stocks make up for what the market's doing. And by looking at these individual stocks, they are telling me that they're ready to break down from that point. Okay, so pay attention to individual stocks, not just the market. All right, pay attention to individual stocks, and they give you a better picture, in my opinion. They give you a better picture than just looking at the market itself. Okay, and speaking of market, here's another thing you can do. Just like selling spreads, what you can do is sell some bear call spreads for SPY. Let's say, you know what, playing direction, and it can be quite volatile. So playing direction, especially to the downside, it's going to get a bit hairy, okay, because when the market sells off, it sells off fast, but when it rebounds, it also rebounds fast as well. All right, so that's one thing I always keep in mind whenever I'm trading to the downside. You always have to be able to book those profits, okay? Because trading in the bull market is easy, right? You just let it ride. And it's nice and steady, slow. But these things, if you're going to trade, if you're going to short stocks, you gotta be a little more on top of your game, because anytime when it gets oversold, it can quickly snap back. And I'm sure you guys have seen that before, right? It can easily snap back and basically, you know, remove the profits give back the profits that you have. So whenever I'm trading to the downside, I take profit early, okay, or at least not scale out. Right? I don't hold and basically hold it and ride it through. So if it gets oversold or short-term oversold, okay, this is where looking at the hourly kind of helps. If it gets short-term oversold, then maybe I'll scale out half of my positions, okay, and then once it rebounds, then I'll jump back in on the other half, right? So you have to be a little more proactive whenever you're short selling or you're going playing to the downside. Okay, so be ready to take profit, and at the same time, when the market looks like it's ready to rebound, be ready to exit. Okay, so that's the main thing I have to say. But if you don't want to play directionally, this is where selling spreads works really well, because, well, the VIX is high, right? When the VIX is high, that means the premium is high. And speaking of the VIX, the VIX actually looks like it's ready to break out, right? You can see that. It's a nice breakout. See, looking from an uptrend, right? If you don't like to look at things from a downtrend, look at some of the inverse ETFs. They look like they're ready to break out, okay, like SDS, not IWM, whatever the other one is, SID. Okay, so well, look at the inverse ETFs. But basically, what they do is they look like they're ready to break out. Now, a word about inverse ETFs, and I mentioned this before. They do decay, so try not to hold too long into them. Okay, because you can see it's kind of sloping down. Whereas if you were to look at the market, we're almost right here back at the support level. But if you look at SDS, SDS is not back here at 27.5, right? It's actually down here. So if you held through all this, you kind of lost some premium, some decay in the price action. So it's not good to hold these things for the long run. But as soon as it makes a pop, then take that profit, all right? Because if you hold on to it, you slowly lose a time premium. Someone asked about the October's earning month. I kind of mentioned that already earlier, where I don't know how earnings will affect it, but I'm just looking at price action. Okay, so that's the main thing. Is I'm looking at price action, looking for a breakdown. That's the main thing I'm looking for. If it breaks down, of course. So how earnings will play into that? Honestly, I don't really know. Okay, but if the market's breaking down and earnings reporting, well, I'm just going to follow the price action, and that's the main thing. But I also did mention that since it's in a downtrend, that these earnings report might get a little bit exaggerated. So you might see huge gap ups or huge gap downs because people are basically on edge right now, and they're overreacting to a lot of things. Right? If you haven't noticed already, right, they're overreacting to a lot of the news that comes out overseas in Europe. So that's the thing, right? So trading, you can see your stock gap up 2%, and it can also gap down 2%, 3%, if not more. Okay, so be very careful, especially in these market conditions, especially in downtrends, that expect volatility, and just be careful out there. That's really what I have to say overall. Is if you're not comfortable trading to the downside, just don't, because you can easily lose your money trading the downside if you don't know what you're doing. So if you're not comfortable, just sit out. Find something else to do. Take up knitting or something, but don't trade the market if you're not comfortable trading to the downside. Okay. Is SSO better than SDS? Well, SSO is basically like the market. So yeah, you know what? I think it is better because there is a trick to this, because SSO is like SPY, right? But since it's an ETF, since it's actually an ultra ETF, they break down a little faster. So rather than being bullish on SDS and buying calls, what you can do is buy puts or short SSO, because they break down a little more than the actual index itself, right? So that's actually a very good point. And yes, I would prefer SSO, going bearish on SSO than going bullish on SDS, okay? For that inherent reason where SDS is decaying, but you can see SSO is much like the market, where it's basically back here at that support level. Yeah. So yeah, that's a good point. Okay. So that's what I mean. I would much rather you guys short SPY, SSO, QQQs, whatever, than actually doing the inverse ETFs because of that. But going through the different indices, you have to notice that there's certain indices that's a little weaker, like the small caps, like the Russell 2000. It's already basically breaking down from that support level, whereas the technology sector, the NASDAQ, it's a little bit stronger. Okay, so if you were to pick an index, if you want to trade the index, try to trade the weaker index like IWM, which is breaking down a little more than the Qs here, which is the technology stocks. Okay, so also pay attention to that, the different indices. So that tells you if I want to short, I don't want to be shorting technology stocks right now because they tend to be holding up a little bit better overall in general, of course. But the smaller caps, and seems to be breaking down a little bit more, as well as the larger ones like Dow Jones. They seem to be breaking down. And last one before we go is Starbucks. All right, someone mentioned about Starbucks. So it's the same type of deal. Actually, this is a very good looking chart. You can see it's staying underneath the moving averages. Once it turns up, now it stays above the moving averages. But the key here is this 50 right there. Okay. It attracted buyers here. It attracted buyers here. So if it does fall, make sure you watch for the 50 for it not to break. But also Could be a possible fake breakout right there as well, right? Try to break out. You see this right here? It made a nice blip above, but it quickly faded back in, okay? And usually when I see that, especially near the new highs, that could be a reversal sign, okay? That could be a reversal sign right there. And for those of you who are candlestick patterns, who like candlestick patterns, this is a Morningstar pattern. It's actually a very good looking Morningstar. Huge white candle, small doji, and a dark candle right there, okay? So that in its own is a reversal sign right there, especially near the top. So I'll be careful with Starbucks. But overall, it doesn't look as bad as some of the other stocks, okay? It's holding its own itself, but overall, I'll say just watch for that weekly moving averages. Okay. All right, guys. So it's 11 o'clock, and I will wrap it up here. And I do have this recorded. So if you guys want to revisit, I'll send you guys the link, or just email me if you guys want the link, and I'll send it to you guys. But overall, I really appreciate you guys for spending your time here this Saturday and listening to me to chat about the market. So if you have any comments or actually some feedback for me about this, then let me know. You know, we're here to improve how we do things. And of course, you know, you can always find us on Meetup. And actually, we have a Meetup if you're in the LA area. We have a Meetup coming up on October 22nd in the San Marino Library. So it'd be nice to meet some of you guys. Obviously, I can't see you guys online, and so really appreciate that you guys come out. And of course, follow us on Facebook. And last thing, if you guys want that 30-day free trial to our website, just let me know. Send me an email. I'll be more than happy to give it to you guys. So with that said, you guys enjoy the rest of your weekend. And again, I thank you guys for coming out.